Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalysts talk. Today, we're looking at Intel.
If you find our talks useful, please consider subscribe, like, and comment underneath.
We have a massive one ahead of us today. We're looking at a company that has, it's been the punching bag of the semiconductor world for, the better part of a decade?
Oh, easily.
But if you look at the data coming out of late 2025, and especially the start of this year, the narrative, it hasn't just shifted, it is completely flipped.
Yeah.
It is Thursday, January 22, 2026. Later today, Intel drops their Q4 earnings. But frankly, the numbers on the page might matter less than the massive strategic pivot happening behind the scenes.
It really is a fascinating setup. For years, owning Intel was like waiting for a train that never arrived. It was a value trap.
Dead money.
Exactly, dead money. People say, oh, it's cheap, and then it would just get cheaper. But looking at the research today, it feels like we aren't just looking at a stock chart. We're looking at a fundamental restructuring of America's relationship with technology.
That's it. The headline really is the return of the national champion. But we need to peel back the layers here. This isn't just about selling more laptop chips.
No.
This is about geopolitics, it's about manufacturing physics, and it's about a balance sheet that has transformed from, a liability into an absolute fortress.
So let's start there with the fundamentals, the turnaround narrative. For so long, Intel was promising the moon and then just delivering delays. What actually changed? Because something clearly clicked in 2025.
Two things really stand out. First, you have to give credit to the leadership shift, especially the influence of Lip-Bu Tan, since he took a much heavier hand in 2025. The company went from survival mode,
Just trying to stop the bleeding.
right, just cutting costs, to acceleration mode. You can see it in the revenue.
Yeah.
2024 was rough. They stabilized around $54 billion, which is basically the floor. But the story the market is pricing in now is that sequential growth we saw all through late 2024 and 2025.
Right, the bleeding stopped. But investors don't pay for not bleeding. They pay for growth. And for a while, nobody was sure if Intel could ever grow again, with AMD eating their lunch.
And that's what Q3 2025 delivered. That was the proof of concept quarter. They hit $13.7 billion in revenue, which beat expectations. They swung from a loss to a profit of 23 cents per share.
Okay.
But, and this is critical for anyone who analyzes chip stocks, the most important number wasn't revenue. It was the gross margin.
Margins are always the truth teller in manufacturing.
Mm-hmm.
I remember when their margins dipped into the 30s, people treated it like the apocalypse.
For a premier chip maker, that is a disaster. It means your factories are inefficient or you're just discounting like crazy to move product. In Q3, they climbed back into that 40 to 45% zone.
That's the magic number.
It is. It proves the painful cost cutting, getting OpEx down to $17 billion. It wasn't just accounting tricks. It actually worked. They're leaner and they're finally making money on the silicon they print.
That's the operational side. But let's look at the bank account. Because usually when a company pivots this hard and builds these massive new factories, fabs cost, 10, 20 billion a pop?
At least.
You expect them to just burn cash like there's no tomorrow?
Yeah.
But that's not what we see here.
No, it's the opposite. It's startling, actually. They ended the last quarter with over $30 billion in cash and short-term investments.
30 billion. That is an enormous safety net. But
Yeah.
They didn't earn all that from selling core processors, did they?
No, and this brings us to what makes this story so unique. A huge chunk of that came from the Cheap PS Act, $8.9 billion in direct grants, and a strategic $2 billion investment from SoftBank.
We need to pause on the government part because it changes the risk profile completely. This isn't just a company anymore.
Yeah.
It's a government partner.
It's deeper than a partnership. The U.S. government effectively owns about 10% of Intel through the Cheap PS Act. You have to understand what that signals to the market. When the entity regulating you also owns a tenth of your equity, you're not just another company. You are the national champion.
It puts a floor under the disaster scenarios. The government has decided domestic chip manufacturing is a matter of national survival, and Intel is the vehicle. They can't afford to let it fail.
Exactly. It creates an implied safety net that competitors like AMD or NVIDIA just don't have. If NVIDIA trips up, that's a market problem. If Intel trips up, it's a national security problem.
And then you add the SoftBank money. Masayoshi Son doesn't throw $2 billion at a legacy company unless he sees something big.
It's a huge vote of confidence from the smart money in Japan.
Okay, so they have the cash, they have the government backing, that's the defense. But you can't win on defense alone. You need offense. For years, TSMC was just running laps around Intel technologically. Where are we now on the actual tech?
This is the moat we need to talk about. The strategy is IDM 2.0, integrated device manufacturing.
Which is just corporate speak for, we design our own chips, but we also rent our factories to make chips for other people.
Pretty much. They want to be the architect and the construction crew. But to do that, you need the best tools. And that brings us to the 18A node.
We see 18A everywhere. Let's break that down. What does that actually mean for the listener? Why should they care about a nanometer number?
18A stands for 1.8 nanometers. In chips, smaller is better, more transistors, more speed, better power efficiency. But it's not just the size. The real breakthrough is something called power via, or backside power delivery.
Okay, simplify that for us. How should we picture that?
Think of a normal chip, like a busy city street. You have the logic signals, the pedestrians trying to move around, but the street is cluttered with huge overhead power lines. It's crowded. It's inefficient.
Okay.
What Power Via does is it moves all those power lines underground. It delivers power from the back of the silicon wafer.
So the streets on the front are just for logic and speed, no clutter.
Exactly. It reduces interference, improves efficiency, and here's the kicker. Intel is doing this before TSMC. This 18A node is the moment Intel technically overtakes TSMC again in process technology.
That is a massive claim. We've heard promises like this from them before. Is it actually real this time?
It's moving from PowerPoint to production as we speak. They have the Panther Lake and Clearwater Forest processors already running on this 18A node. If this ramps successfully, Intel has the best process tech in the world again. Period.
And the market is starting to sniff that out. Let's shift to the technicals, the stock price.
Yep.
Because if you've been watching the chart, it's gone parabolic.
It's a classic breakout. In 2025, the stock was up about 84%. For a mega cap company, that is a huge move.
And it hasn't stopped this year.
No. Just the first 3 weeks of 2026, we are up another 19% year to date.
It's making higher highs. It's not just bouncing. It's trending up aggressively.
And the momentum indicators confirm it. We saw a golden cross set up recently.
For those not glued to the charts, what's a golden cross?
It's when the short-term moving average, like the 50-day, crosses above the long-term, like the 200-day. It signals the trend has shifted from bearish to bullish. It's a green light for trend-following funds.
And the volume is there to back it up.
That's what strikes me most. The volume is high. This isn't just retail traders pushing it around. This indicates institutional accumulation. Big banks, pension funds, they're loading the boat. They are buying the dips.
It also seems incredibly reactive to news. I mean, it jumped like 10% just on CES announcements.
And another 10% after the CEO met with the president. It's a sign of high elasticity. The market is looking for any reason to buy. The whole sentiment has flipped from Intel is a dinosaur to Intel is an AI infrastructure play.
Which brings us to market perception. Analysts are changing their tune, aren't they? It wasn't long ago everyone had a sell on this.
They're scrambling to update their models. Milius Research recently upgraded to a buy with a $50 price target. But look at why. It wasn't just PC sales are up. They cited the value unlock from the foundry business.
Realizing the factory business alone could be worth what the whole company was trading for a year ago.
Precisely. And the narrative around AI is shifting. For 2 years, the story was AI kills Intel because everyone wants NVIDIA GPUs. But now it's the AI PC.
Meaning you need a powerful CPU with a neural processing unit to run AI locally on your laptop.
And that's Intel's home turf. They're finally being seen as a beneficiary of the AI cycle, not a victim. You see it in the 13F filings. Funds are buying this as a reshoring play. If you believe manufacturing is coming back to America, you mathematically have to own Intel.
Okay, let's get into the juicy stuff. The rumor mill. There is some wild speculation floating around, and these rumors seem persistent.
They are persistent, and they involve the mega whales.
We're talking about NVIDIA, aren't we?
Yes. The rumor is that NVIDIA might hedge its bets. Right now, they rely almost entirely on TSMC in Taiwan. Geopolitical tension is high,
To say the least.
So the speculation is that NVIDIA might use Intel Foundry for some chips just to appease U.S. regulators and diversify their supply chain.
It would be the ultimate irony, NVIDIA paying its rival to make chips that compete with it.
It makes total sense, though. It's risk management. And then there's an Apple rumor.
Oh, I've heard this one, after Apple famously dumped them.
Right, but they still need someone to manufacture their M-series chips. The speculation is that Apple might use Intel's 18A process for future chips around 2027, if Apple came back, even as just a manufacturing customer.
That would validate the whole strategy overnight. The ultimate seal of approval. Designed by Apple in California, assembled by Intel in Ohio.
Exactly. Now, to be clear, these are speculative. We have no confirmation. But the fact that these rumors are now credible shows how much has changed. 2 years ago, people would have laughed at this.
We also saw some M&A buzz with Sambonova.
Right, the talks with AI startup Sambonova. And Mobileye acquired Menti Robotics. Even though the Sambonova deal stalled, it shows Intel is aggressively looking to buy its way deeper into AI. They know they need more software talent.
So bringing it back to the present, what are we watching for, literally today?
Today is the big test. Q4 2025 earnings. It drops this afternoon.
And what's the number to beat?
Consensus is about $13.38 billion in revenue. But honestly, I think the revenue is secondary. The market will be listening for two things. Updates on 18A yields, are the factories working, and any new foundry customer announcements.
If they answer a big name on the call.
The stock goes vertical. A beat on earnings plus good guidance on the foundry confirms the whole breakout.
And just past today, what's on the calendar?
The rollout of the Core Ultra Series 3 that they launched at CES, are people actually buying AI PCs? And then Panther Lake shipments start late this month. That's the first big consumer chip on the 18A process. That's the real-world test.
Okay, we've painted a very rosy picture. I have to play the skeptic. What's the bear case? What breaks this whole thesis?
Execution is everything. And let's be honest, Intel has a history of stumbling on execution. The biggest risk is the 18A node. If there are delays or if the yields are low, the entire thesis breaks. They have to deliver.
And the competition isn't sleeping.
No. NVIDIA is a juggernaut. Intel is fighting a war on two fronts. Data center against NVIDIA, client PCs against AMD. That is incredibly difficult. It stretches resources thin.
I've also heard some chatter about macro risks, like memory prices.
That's a supply chain risk. If memory chips get too expensive, the whole PC gets too expensive. Then people delay upgrading, and the AI PC cycle that Intel is banking on just fizzles out. They need that volume.
And finally, the foundry profitability. What if they build it and nobody comes?
That's the field of dreams risk. These fabs cost tens of billions. If the whales like Apple or NVIDIA don't show up, they're just burning cash to run empty factories. They absolutely need those external customers to make the math work.
So, weighing all that, the war chest and government backing against the execution risk.
Yeah.
What's the final verdict? How do you score it?
I'm giving this a bullish 8 out of 10, maybe even pushing a 9 depending on what they say on the call today.
That is high confidence.
It is. Here's the elevator pitch. Intel has successfully pivoted. They're a government-backed national champion of manufacturing now. With 18A, they have a tech lead for the first time in years. Their balance sheet is a fortress. And most importantly, they're still trading at a massive valuation discount to TSMC or NVIDIA.
It's the catch-up trade.
Exactly. The valuation gap is just too wide. Even if they're only moderately successful, the stock has room to run.
So for the listener, how do you play it?
It depends on your timeline. For a swing trader, you could play the earnings momentum today, but for a long-term investor, this is a multi-year hold. You're buying now to wait for 2027 when those factories are fully online and hopefully printing money.
It really is incredible to think about. We talked about NVIDIA and Apple maybe using Intel's factories. I want to leave you with this thought. Imagine a world where Intel manufactures the chips for its biggest competitors. They stop being a competitor and become the toll booth operator for the entire industry.
That's the ultimate frenemy strategy. You don't have to beat them, you just have to charge them rent.
And if they pull it off...
It's the greatest corporate turnaround of the century.
Fascinating stuff. We will be watching the earnings tape very closely this afternoon. That's all for today's analysis on Intel.
Thanks for listening.
And as always, if you enjoyed this breakdown, make sure to subscribe and leave us a comment. We'll see you tomorrow.